Hello and welcome to this Friday's morning market briefing. We've got lots to talk about. Firstly, the ECB has raised rates to an all-time high. Secondly, Hunter Biden has been indicted on federal gun charges. We've got lots to talk about on the charts as well, and lots happening on the economic calendar with new Chinese data coming out. But we'll come to the charts at the end of the video, so stay around till then. But let's get straight into it. So the first topic to talk about is the European Central Bank, which has raised rates to an all-time high in a bid to cool consumer prices. Now, we've been speaking about the ECB this whole week, really, with President Lagarde's speech. I believe it was this week or maybe last week on Friday, but we spoke about that in relation to what was expected of, whether rates were going to go up or whether they were going to stay the same, as has been hinted by the Fed. However, it does seem that rates will raise by another 0.25% for the ECB. Now, this has been the 10th consecutive time that rates have been raised by the ECB, and this time by 25 basis points, to 4%. Now, despite raising rates, surprisingly, the euro did fall after the central bank signalled that its cycle of interest rate rises was near its end. And we've heard this rhetoric from quite a few central banks now, and it does seem like it's becoming more and more of a reality, despite stagnant or at least resistant inflation. Now, they signalled that the interest rate cycle might be coming near to its end, meaning that rates may start to come down soon, or at least rates won't be going higher anymore. And this kind of, it tells the tale that it might be time to get your money out of the euro, because it won't be earning as much interest. Despite rates going up, they might not stay at that level for too long before rates start coming down. And this isn't a surprise to many of us, that as we've been speaking about recently, in the way that rates have been affecting the European economy and the German economy. This comes as no surprise to us, because there's been some issues within the German economy as well as just the general eurozone, and so it's no surprise that when rates are high, economies are going to struggle, because it's harder to borrow to finance costs. And so we always understood that at some point they were going to have to lower rates, or at least say that they were coming to the end of their rate hiking cycle, so that finally, the economy could get back to growing again. But yes, the increase in the base rate came as officials cut their growth forecast for the Eurozone economy, which we spoke about yesterday. And that was also in line with them raising expectations for inflation. And that's primarily why we've seen this interest rate rise, is that kind of expected more resistant inflation figure. And that's coming with the rising oil prices, but we'll come to all of that now. The euro fell to a 3-year low against the dollar after Thursday's decision, and the currency was down 0.75% on the day. We'll come to euro USD on the charts at the end of the video, so stay around till then. But yes, the euro did fall despite the decision. But once again, that's just because kind of people saw that maybe the ECB were coming to the end of their rate hiking cycle, whereas the Fed had been talking about keeping rates where they are for quite a bit of time. And so maybe the dollar's looking like a better opportunity, but we'll also come to the dollar at the end of the video. Now, a recent move along with that, the 2-year German Bunds yield fell 0.01 percentage points to 3.16%, showing the increase in demand for bonds. Because as we know, if there's an increase in demand for bonds, the price of bonds will go up, and as a result, the yield will fall. It's an inverse relationship, and so that's presented here. So it's funny because we're seeing an increase in rates, yet people are actually moving their money away from the euro and back into bonds. Now, the recent move takes the ECB's deposit rate above the previous record high in 2001. However, the ECB has hinted that Eurozone borrowing costs have peaked, which we've spoken about. Now, the rise in expected inflation rates have likely contributed to this rate hike decision, and the comments on possibly coming to an end of the rate hiking cycle has also been triggered by the recent data showing economic decline and stagnation in the Eurozone. And we spoke about recently recently, the issues within the German car manufacturing sector, with declines within that sector, with certain businesses, expecting to move out from Germany, as there would be lower costs and easier borrowing methods in comparison to the current situations within the Eurozone. Now, that said, with oil prices on the rise, it is hard to tell what the future of rate hike decisions will be like, because we'll come to oil at the end of this video, but oil is still on the rise price wise, and that plays a great effect into how inflation is perceived by consumers and businesses, because business requires diesel, petrol, oil in its other forms for production usually. And along with that, one of the greatest tellers for, one of the greatest signals, for consumers and for just individuals within an economy about the way the government is handling inflation is, petrol and diesel prices. And so rising oil prices may affect inflation greatly, and as a result may affect rate hiking decisions. But that's all for the ECB. We'll come to the charts in relation to that at the end of the video, so stay around. If you're still here, please like and subscribe, it really does help. But the next article to talk about is Hunter Biden. Now, Hunter Biden has been charged with 3 federal counts of gun offences. Now, Hunter Biden is facing charges such as false statements related to the purchase of a firearm and the information required for these transactions, as well as the possession of a firearm by an unlawful user or addicted to a controlled substance. And we understand that Hunter Biden's been surrounded by, a series of controversy since Biden came to his father Biden came into power as the US president, and the series of issues to do with his son Hunter Biden have come up. And yesterday we even spoke about the new impeachment probe by by Kevin McCarthy in relation to that, and we'll come to that in a second. Now, Hunter Biden has initially reached a deal. Initially reach a deal with federal prosecutors to resolve the charge related to possessing a gun while using a controlled substance. However, this did fall apart in July, and this indictment now adds 2 new counts. This will also pile political pressure onto Joe Biden, in the lead up to the 2024 election. And this is largely due to accusations around the president's relation to Hunter Biden's business dealings, and any issues with a president's family obviously will come up within their presidential campaign. So it'll be interesting to see how this kind of issue being taken to court will actually affect Biden's campaign. And we'll come to US indices at the end, because this has had a surprising inverse effect on what you might expect. Now, this obviously will pile on political pressure for Joe Biden in the lead up to the 2024 election, as other things start to pile on him, as well as they do in the lead up to elections. But it also, as I said, comes 2 days after Kevin McCarthy launched an impeachment trial into the president related to Hunter Biden's business dealings. And we know that Hunter Biden's had issues before to do with his business dealings in areas such as Ukraine and other corrupt nations. And so there's been, large issues around that, and large accusations which have been made, with allegations that Biden lied over, these issues and his relations to Hunter Biden to do with, this level of corruption that's been highlighted. Now, this charge over Hunter Biden's purchase of a firearm stems from when he tried to purchase a Colt Cobra revolver in 2018, where he declared he was not an unlawful user of a controlled substance when in fact he knew he was. Now, these 3 counts, carry a total maximum penalty of 25 years in prison. However, that said, we understand that these sentences often come far below the maximum possible sentence for the individual, with other options to also end your term earlier, such as parole. Joe Biden commented on the impeachment probe, telling donors, "I don't quite know why, but they they just knew they wanted to impeach me. And this is kind of what we spoke about recently, that this might largely be related to Trump trying to divert, a lot of the political attention that was focused around him and his criminal proceedings, and trying to, divert this more towards Joe Biden to take the media focus away from him. But that's all for the articles. Next to move on to is the charts, and the first to talk about is US indices. We'll come to Brent crude oil near the end, but as you can see here, we've been speaking about for the past few days, there was a retracement on the US indices, but then it started to consolidate around these Fibonacci areas. But from yesterday, we've seen a massive rally and surge in the US 30, the Dow Jones, kind of reaching up to near these highs, possibly taking, punching liquidity around this 50% area before moving higher. And this is sort of in response to the euro news, where despite the euro actually, the ECB actually raising rates, which would make the euro usually go up in its value, instead it actually caused a decline, because many saw the Fed as wanting to keep rates higher for longer, whereas the ECB said that although they've raised rates, they kind of want to be ending their rate hiking cycle, and so start to bring down rates sooner due to their economic troubles to do with growth. And so people have kind of moved their money out of the euro and into the dollar, it seems. And along with that, it's sort of expected when one country starts to reduce rates, or at least says that they're going to start, going into the process of lowering rates or not raising rates anymore, it's kind of expected that other countries will continue the same sort of pattern. And like we've seen here with, the US, it's now being seen that it's likely that the US will also bring down its rates sooner. And as a result, stocks have rallied in the US as people expect to lower rates sooner than usual. And we've kind of seen this reflected across the US 100, the NASDAQ, as well as the US 500, so the S&P 500. So we've seen it reflected across all of these US indices. But next to talk about is the dollar, which has also seen a rally based off, the ECB's rate hike decision. But we've spoken about this many times now, that basically, because the euro because the ECB has raised rates, but also has said that they're looking to bring down rates sooner than usual. That's caused a rally in the dollar, as people have taken their money out the euro and stuffed it into the dollar, as they expect to keep a higher rate of interest for longer. And we'll come to Euro USD in a second. But as you can see here, the dollar has broken above its previous highs of 105.167 and is now making new highs on 105.342. 342, yep. We kind of expected in the lead up to these decisions for possibly the dollar to make its way down to these areas of liquidity on the Fibonacci chart, but it does not seem like it's made its way there, and it's kind of just used the liquidity from the 23.6% Fibonacci area to move higher, and that's what is done here. But now to Euro USD, so on the same topic of the dollar, we've been speaking about this area of liquidity for a long time. We spoke about this liquidity here, and just as expected, this was used as resistance to the downside. And so after punching liquidity in this zone here, it's moved to the downside following the rate hike decision, but the comments made about the rate hike, the euro has fallen off and tumbled down into this lowest low area, which we've marked here, which was made in the 30th of May 2023, and now it's reached this level again, punching into this liquidity. So it'll be interesting whether, because it's now in this liquidity where there's likely to be lots of buy orders, possibly the euro will move a bit higher before the macro economic fundamentals kick in and it continues to the downside. But that's all for the euro. Next to talk about is pound yen. Been talking about this a lot, and I highlighted this sort of area at the bottom of the upward channel that the pound's been presenting to us. And I kind of noted that we've been seeing this downtrend, short-term downtrend on pound yen, and I think it's likely that the price will reach this area before continuing higher. And this is what we've sort of seen in yesterday's price action, and it's nearly reached the bottom of this channel, but also just punched into this general area of liquidity that's likely to be at the bottom of any of these trend channels. So it'll be interesting to see whether it will actually possibly come down a bit further to properly touch the very bottom of the channel before moving higher, or in fact it won't respect it anymore and just continue lower, as we've seen here with this kind of downtrend that's being presented. But moving on from that, we have gold to talk about. Now, gold has kind of been falling off. It broke through this upward trend line. It broke down through that, and with the positive news for the dollar coming out today, we've also seen a sell-off on gold, and it's kind of punched into this 78.6% Fibonacci area, where there's lots of liquidity that we've highlighted before from this lowest low. So it'll be interesting to see whether now it's reached some area of liquidity around the 1900 area, whether it will actually continue higher, or in fact it will continue lower with the more positive dollar news coming out. And finally, to talk about, of course, is Brent crude oil. We've been kind of looking for an opportunity on this commodity for a while now, but it does seem that it's just so bullish with the news around Russia and Saudi Arabia trying to push for that $100 a barrel for oil, that it does seem like it won't be able to make any significant retracements to get in. I really did expect oil to come around here and retest this area of liquidity, but it does seem like it struggled to do so and simply bounced off this 23.6% area on the Fibonacci chart, on the Fibonacci retracement table, and has continued higher, breaking above the Fibonacci extension of minus 27.2%. And so it'll just be interesting to see how far really this rally on Brent crude oil can really go, whether it will reach the 100 mark, or possibly it will fall short with a sell-off incoming. But that's all for the charts. Next to talk about really is the economic calendar, of course, with lots of data coming out today, with firstly Chinese house price index data coming out, along with Chinese industrial production data, as well as Chinese retail sales figures, as well as Chinese unemployment rate figures coming out. So lots of Chinese data coming out today. So if you are trading the one, keep your eye on that, or any close pairs that are to do with China or neighbor China, keep your eye on that. And along with that, we've got French and Italian inflation rate, and that'll be interesting considering that we've had the rate hike decision coming out from the ECB yesterday, and how how inflation data within the Eurozone might start to shape the next rate hike decision, and next to talk about obviously is the Eurozone balance of trade, which obviously will have a great effect on the euro, because obviously balance of trade has just such a great effect on the foreign exchange value, as well as the ECB's President Lagarde speech as well today, as well as that US industrial production figures are coming out, along with the US Michigan Consumer Sentiment Index coming out, and that will tell the tale for what people are seeing of the US economy. But that is all for today. If you've made it this far, please like and subscribe. It really does mean a lot. I hope you've enjoyed this video, and once again, another video will be out this Monday to start the week off strong. But that's all for today. Have a great trading day, and have a great weekend. Enjoy yourself. Goodbye. See you later.